thank you for joining us today for today's hearing of the Joint Economic Committee. Over the past few months, following the spread of the novel coronavirus and all of the devastation that has been brought about in its wake, millions of Americans have been robbed of health, of financial security, the certainty of normalcy in their day-to-day lives, and even of their sense of community and connection to others. As it always has in response to our nation's challenges, our voluntary civil society in America, through its courage and compassion, has striven to bring us together to address this very significant, in many ways unprecedented public health crisis. Nonprofits, churches, and other voluntary institutions of civil society have, for centuries, played a uniquely important role in American life, helping to provide for others' basic needs, ensuring the stability of community institutions, and supplying goods such as education and the arts. Key to this spirit is charitable giving. Without financial donations, these organizations simply cannot undertake the good works that they do in providing the indirect benefits, including the provision of these indirect benefits of personal connectedness, reciprocity, and trust that are invaluable and have become indispensable to community thriving and the thriving of the human condition. Unfortunately, there have been worrisome trends in charitable giving over recent years and over the last few decades. As the Joint Economic Committee staff research has found, while total American charitable giving has increased in most years over the last half-century, the overall percentage of Americans giving has actually decreased from 66% in 2000 to 56% in 2014, with a particularly pronounced drop among lower-income Americans. Among those at the lower end of the income spectrum, the drop in giving since then has dropped the most. Additionally, the share of individual giving out of total giving has dropped over time, decreasing from 83% in 1978 to 68% in 2018. In other words, giving now comes increasingly from fewer, wealthier people and organizations. So why does that matter? Why should we worry about it? Why are we here today to discuss that? Well, first, it denies communities the necessary positive spillover effects that flow from individual contributions and widespread altruism. And second, the very causes being supported are likely to change as a result of these trends. While higher income Americans tend to give to education and the arts, less affluent Americans tend to give towards service and assistance to the poor. In fact, those making $100,000 or less per year are responsible for almost 49% of all giving in this area of vital need. In other words, even though this segment of the American population might be donating in larger increments, there are a lot of them donating, and a lot of them who have donated historically. And those people are donating in especially valuable areas, and in areas where the absence of the giving might be felt especially strongly, with especially devastating consequences. One contributor to this trend is the federal tax code's inequitable treatment of charitable giving. Because it is below-the-line deduction, only those who itemize, that is to say, generally, tax filers toward the upper end of the income scale, can currently claim the charitable deduction. Lower-income families who don't itemize now receive no incremental additional tax benefit, specifically because of their charitable contributions. That is to say, they don't get anything beyond the standard deduction. This is an unintended consequence of the long-standing bipartisan effort to raise the standard deduction, which itself provides tax relief to lower and middle-income filers, and that's a good thing. But it's an inequality just the same, and it's an injustice to working families and to the local charities who rely on them, especially those charities who do some of the most important work, as we've just mentioned. While the CARES Act, passed earlier this year, did add an above-the-line deduction of $300 for non-itemizers, much more could, and I believe should, be done. I called this hearing to talk about how, especially in this time of immense, unusual hardship, when charitable giving is so essential, Congress could better address this disparity. In recent weeks, I've been part of a bipartisan working group to develop legislation reforming this inequality. I'm grateful that three other members of the group, including Senator Langford and Senator Shaheen and Senator Klobuchar, are willing to be here to talk about it today. Senator Klobuchar is a member of the Joint Economic Committee, and Senator Shaheen and Langford, who are joining us specifically for this hearing today. Especially as we reopen our businesses and our institutions, leveraging charitable giving should be a top priority for those of us tasked with reviewing economic conditions in our country. In the coming months, those of us in the House and the Senate are going to expend a lot of energy trying to figure out which of the federal programs on which we've spent all these trillions of dollars have worked and which haven't worked as well. It's going to be a complicated and at times probably controversial project for all of us, but it's necessary nonetheless. With the nonprofit sector, however, the vetting work has already been done for us. Charitable organizations only exist and only attract donations to the extent that they're already believed to succeed. In fact, you can't get donations, and if you get donations once, you can't get them again and again, unless you can present evidence to your donors that you're actually doing something good with it. So these organizations can serve as sort of the tip of the spear in our national COVID response. Today's hearing will focus on just that, and we're going to hear not only from Senators Langford and Shaheen, and from Senator Klobuchar, who again is a member of the committee, but from two additional witnesses with valuable perspectives on philanthropy. I look forward to hearing the contributions of our panelists and our colleagues on this important topic. But before we proceed, I want to say just a couple of words about the hearing and about how our hearing has been modified from its usual format in light of the spread of the coronavirus. The hearing room has been configured to maintain the recommended 6-foot social distancing between members and other individuals in the room as necessary to operate the hearing, which we have tried to keep to a minimum. A number of members and witnesses have chosen to use secure video teleconference technology, which will allow them to participate remotely. For those joining us remotely, once you start speaking, there will be a slight delay before you're displayed on the screen. And so to minimize background noise, we're asking those of us who are using video conference, the video conference option, to please click the mute button until it's their turn to speak or to ask questions. With that, we're now going to hear an opening statement from Vice Chairman Beyer. Vice Chair Beyer, go ahead. Vice Chairman Beyer, go ahead and unmute yourself. We can't hear you. Unmute. Then.
Thank you, Senator Lee, very much. Senator Lee, thanks so much for putting this together. And thank you to our witnesses, Dr. Asili and Mr. Krim, for sharing your expertise and perspective. And thank you to Senators Langford and Shaheen for joining the committee this afternoon. Charities are one of our most unique and precious resources. They provide invaluable services and strengthen our communities. Perhaps at no time in our history has this important role been so visible as during this global pandemic and the resulting economic crisis. I volunteered at a local food bank recently, and as long as I was there, we never saw the end of the line. And they told us that because half of their resources typically came from the restaurants, and the restaurants were all closed, that they were in really dire need. Throughout this crisis, American charities have been the frontline responders. They provide communities with critically needed housing. They provide emergency childcare for those first responders, support for victims of domestic abuse, counseling, and other critical services. But as Chairman Lee said, unfortunately, at a time when we need our nonprofits more than ever, they're facing really serious economic crisis. 3/4 of charities have seen a decline in donations since the crisis began, and half expect to absorb a hit of at least 20%. They have a lot of different resources, businesses, foundations, individuals, but individuals are key. 70% of all nonprofit gifts come from individuals. And since 2000, the share of households donating to nonprofits has fallen from 2/3 to 53% in 2016. To make that concrete, that's 20 million fewer households actually giving. And unfortunately, the 2017 Republican tax cuts, the Tax Cuts and Job Act, made things worse because it doubled the standard deduction. So many people that used to be able to itemize couldn't anymore. And it capped the state and local tax deduction, raising the tax burden for so many people who used to give money. As a result, of course, we saw a lot of reduced itemized deductions. It fell precipitously before. 26% of households itemized. After the Tax Cut and Jobs Act, only 10%. So for the nonprofit world, that hurt really badly. Fewer itemizers meant fewer givers. And it shouldn't be a surprise to anybody that individual donations fell in 2018. Despite the fact that the economy was very strong, the unemployment rate continued to come down, stock market continued to go up, the charitable givings fell by 3% inflation adjusted. And as a percentage of GDP, it actually fell by 6%. And now with the current crisis, contributions are falling even faster as they have fewer donations, and most charities depend on one or two big events every year, and they've all been canceled. So this means less money will be available when many more nonprofit services are actually needed. As a result, 60% of charities have cut services, and 13% of the smaller ones have actually ceased operations. And this has an impact on our employment too, because literally 12 million Americans work for nonprofits. It's 10% of the private sector workforce. So 1 in 6 nonprofits has had to lay off workers. 1 in 8 laid off workers, 1 in 6 are furloughed. So what do we do about it? Well, we get to talk to Dr. Osili and Mr. Krim today, but I really am excited about proposals to incentivize additional charitable deductions to expand that $300 addition that was included in the CARES Act. And this could really help offset the lost contributions that resulted from the Tax Cuts and Jobs Act. So, we've done a lot in the meantime. Congress expanded the PPP, the Paycheck Protection Program, for nonprofits, and we have an employee retention tax credit in the CARES Act, and the HEROES Act increases that from 50% to 80%. But there are other ways to go forward. One path is to tap the generosity of our senior citizens. I've introduced a bill that would incent charitable giving by expanding the IRA charitable rollover to allow people starting at age 65 to make tax-free IRA rollovers to charities while providing a guaranteed income for the senior citizen. I know Senator Klobuchar has introduced legislation to provide grants to nonprofits to help them retain employees or hire those who have become unemployed. There are a lot of smart ways to address these challenges. Some in Congress feel no sense of urgency, but I know that all of us are hearing in our district every day, from nonprofits big and small, that a sense of urgency is exactly what's needed. So I'm grateful to Chairman Lee. This will be my first hearing with Chairman Lee, focusing attention on what we can do right now to support charities and help them weather this storm. And again, I'd like to thank our witnesses for coming inside and outside Congress to help us move forward. With that, Chairman Lee, I yield back.
Thank you so much, Vice Chairman Beyer, and welcome aboard and congratulations on your selection as the Vice Chair. We're now going to hear a brief opening statement from Senator Klobuchar before we proceed to our member panel. Senator Klobuchar, go ahead.
Well, thank you so much, Chairman Lee, and thank you to Vice Chair Beyer. Actually, Vice Chair, you should know that Chairman Lee and I have co-chaired the Antitrust Subcommittee in different roles, ranking and chair, for, I don't know, like 8 years together, and he's pretty good to work with, so you should be in good hands. I think what we see here is that the pandemic is squeezing our nonprofits on both ends. The public need is soaring for their help at a time when charitable giving and other revenue streams have declined drastically as a result of the pandemic, as my colleagues have noted. And I was really struck by that when I went and visited one of our food banks, and someone who was in the line said that they had previously volunteered. They were at a job and they volunteered, and now they were in line to get food. And so things are changing, and a lot of people are out of work that never even imagined they'd be out of work. And a lot of people are having trouble financially. And we all know that one way to boost this up with help is our nonprofits. And the Vice Chair mentioned my Work Now bill, which would actually connect kind of the same concept coming out of the Great Depression when Franklin Roosevelt started the CCC and basically took people who were unemployed and said, here's something really good work to do. Well, we can do that through things like AmeriCorps, which I support, but we can also do that by plugging people into our existing nonprofits. So that's one idea. The second is what the chairman has been referring to, and that's the work that we're doing, and I'm sure work is going on in the House as well, but in the Senate with Senator Lee and Coons and Langford and Shaheen. Thank you for joining our committee, as well as Senator Scott, in advocating for a substantial above-the-line charitable deduction to help nonprofits who are sorely in need of revenue. I'm glad that we were able to get a modest above-line deduction into the CARES Act, and we need to build on this success to greatly expand the deduction. Examples: Catholic Charities in Minneapolis and St. Paul are facing increased costs totaling $1 million per month because of frontline staff, additional cleaning, redesigning their services so they can accommodate this horrible virus. Jewish Federation seeing very similar numbers. At Habitat for Humanity forced many of the organizations in Minnesota to take deep cuts, including significant layoffs. These nonprofits are on the front line. I think the smartest thing we can do right now is to keep them strong. And thank you for holding this hearing, Chairman Lee.
Thanks so much, Senator Klobuchar. I'd now like to introduce our two distinguished colleague witnesses. First, we're going to hear from Senator James Langford, who serves as a senator from Oklahoma. Senator Langford is a member of the Senate Committee on Finance, the Senate Committee on Appropriations, the Senate Committee on Indian Affairs, and he's the chairman of the Senate Homeland Security and Governmental Affairs Subcommittee on Regulatory Affairs and Federal Management. I'm sure that flows easily when you say it. He's been involved in previous efforts to reform the charitable deduction. In fact, this has been a passion of Senator Langford's for a very long time, including the introduction of the Universal Charitable Giving Act in 2019. Welcome, Senator Langford. And after Senator Langford, we're going to hear from Senator Jeanne Shaheen, who serves as a senator from New Hampshire. Senator Shaheen is a member of the Senate Committee on Foreign Relations, the Senate Committee on Armed Services, the Senate Committee on Small Business and Entrepreneurship, and she's the ranking member on the Senate Appropriations Subcommittee on Commerce, Justice, Science, and Related Agencies. She's introduced her own legislation to promote charitable giving and is a longtime advocate of this issue. Her legislation is the Supporting Charitable Institutions Act. Welcome, Senator Shaheen. So thanks for joining us today. Senator Langford, you're now recognized for your testimony.
Chairman Lee, thank you. And to Vice Chairman Byer and the other members of the committee, I appreciate you having the hearing today and to be able to talk about this issue. I'm going to stray from my prepared remarks. I've submitted some remarks for the record, but let me just make a couple of comments on this. I served with nonprofits more than 20 years before I came to Congress. I understand the nonprofit issues and what they face, both on finance and the structure and the staffing and the challenges of volunteers and all the things that happen when you work as a nonprofit. One of the issues that we face now, though, that's changed even from 5-10 years ago, is the rise of the GoFundMe page, where individuals that want to give small dollar donations will give dollars to individuals and to causes, things they see on the news or things they hear about, and they'll do a GoFundMe donation. That's a wonderful thing to do if they can find legitimacy at the GoFundMe page and what they're trying to be able to accomplish. Nonprofits are different, though, than the GoFundMe. Nonprofits don't exist just for a single event, a single person rise and fall, and then they go away. they exist for all people in the community. They're churches, they're synagogues, they're mosques, they're feeding the homeless, they're taking care of individuals' groceries, they're paying utility bills, they're the Boys and Girls Clubs helping with afternoon activities, they're Goodwill providing jobs and opportunity and resources to people that desperately need help. They're doing work all the time, every single day. And the individuals that work in those nonprofits, they understand full well, but I fear some Americans do not, that we have three safety nets in America. The family is the first safety net, nonprofits are our second safety net, and government is our third. And we often look to government to be able to solve the most difficult challenges of our safety net and of people in crisis. But government is the last spot for that. The first two are essential. And if the family collapse, nonprofits struggle to keep up and government struggle to keep up with that. If the family collapses and nonprofits collapse, it all falls on government. And we are not structured to be able to help maintain the needs in communities like families are and like nonprofits are. Government is efficient at writing a check. Government is efficient at developing a program to be able to facilitate activities. Government cannot meet the human needs that are there like a family can and like a local nonprofit can. So I think it's beneficial for us in our official policy and what we choose to do in the tax code to be able to create a tax code that is encouraging to families and is encouraging to nonprofits. Now, again, Americans have their own money they can choose to do with what they want, and Americans are exceptionally generous people. But when we incentivize it and we encourage it, as we have with the CARES Act, we stepped up to say nonprofits are going to struggle through this time, so let's do a $300 above the line, straight off the top deduction for every American that they can choose to use. We're incentivizing that activity. Now, I can be frank with this committee to know, and folks that are here know, that I push for much more than just a $300 deduction above the line during the CARES Act. Many of us, if not all of us, did during that time period. But I think that there is more that we can do and should do in the days ahead. We've recommended a 1/3 of the standard deduction. That is $4,000 for the individual, $8,000 for the married filer, for them to be able to write off. That is a significant encouragement. That encourages individuals to be able to do more in their local communities, to be able to make sure that we sustain that work of that essential safety net of not-for-profits all across our community. So whether they're working in the arts, whether they're working in the homeless community, whether they're working in the faith community, they will still be there when this is said and done and this pandemic is over. Quite frankly, it's good policy no matter when we do it, whether it's a pandemic or not, for us to be able to continue to tax less to encourage more engagement. By far, not-for-profits are more efficient in getting resources and assistance to local communities than government is. So the stronger we can have not-for-profits, we're getting more efficient support to local communities. And I think that's the right thing for us to continue to incentivize. I do want to say thank you to Senator Shaheen, Senator Coons, Senator Tim Scott, Senator Klobuchar, and certainly Chairman Lee. We've all been very engaged in this conversation. And it's good to have this as not a partisan conversation. It's just a what can we do to be able to help as many people as possible conversation. Congressman Walker in the House has been a tremendous advocate for this for a very long time as well. He also knows full well what it means to be able to work around not-for-profit institutions and understands the needs in the operation. So grateful to be able to have great partners in this and look forward to actually getting this done in the days ahead.
Thanks so much, Senator Langford. Senator Shaheen.
Well, thank you very much, Mr. Chairman. I'm really pleased to be able to join Senator Langford in talking about this critical effort and really appreciate your leadership and Vice Chairman Beyer and all of the members of this committee in holding this hearing today, and appreciate your leadership of this bipartisan group to try and address the charitable contribution in hopefully in another package of help that we're trying to provide to the people of this country. You know, my home state of New Hampshire has historically very small government and a very robust nonprofit sector. And as Senator Langford said so eloquently, the nonprofit sector provides so many services in New Hampshire and a real safety net for many of the people in our state. We have organizations like area agencies that provide programs for people with developmental disabilities and their families. We have the New Hampshire Coalition Against Domestic and Sexual Violence that provides crisis centers for people who are victims of domestic violence. And we have the New Hampshire Food Bank. Now, you know, those are just 3 examples of the organizations that right now are working overtime to address the challenges as the result of this pandemic. And what's interesting to me is that the New Hampshire Food Bank, unlike the other 2 agencies that I mentioned, accepts no public dollars. Many of our nonprofits get some public dollars at the county, at the state, at the city level, but many of them do not. And right now, they're working overtime because of this pandemic. The call for their services has increased, and yet the contributions, their ability to continue to provide those services is very much at risk. According to a recent Pulse survey that was conducted by the New Hampshire Center for Nonprofits, 92% of responding nonprofits have reported a drop in revenue by an average of 34%, and 45% of the respondents had to furlough some of their employees. And at the same time, according to this same survey, 38% of organizations, including 45% of human service organizations, reported an increase in demand for their services. So this is a time where whatever we can do to try and encourage private giving, which, as you pointed out in your statement, has historically been higher than it is right now. The more we can do to support that private giving, to encourage help for these organizations, the more we can help them survive the current economic situation that we're in, and the better they can continue to provide services, whether it's in the arts or homelessness or whatever it is. And as Senator Langford pointed out, what we're hoping to do is get an above-the-line deduction of up to 1/3 of the standard deduction, so $4,000 per individual or $8,000 for a married couple filing jointly. And in addition to that, I have proposed, as part of what we're doing, allowing the deduction for charitable contributions made before the new tax filing deadline of July 15th to be carried back to tax year 2019. So it would help, we hope it would help stimulate giving for this year right now when it's so desperately needed. So thank you again, Mr. Chairman, for holding this hearing, for your leadership in this effort. I am so pleased to be able to join you and Senator Langford and Scott, Senators Klobuchar and Coons, and hope that we can be successful in getting something into the bill in the Senate that we can then get signed into law. Thank you.
Thank you so much. Your remarks, both of you, have been terrific and have provided deep insight, backed up by many years of toil in this area. So thanks so much for joining us today. We're very grateful. We're now going to transition over to our second panel. Our second panel will be joining us remotely. I'm going to introduce each of our witnesses. First, we have Mr. Bill Krim, who's the President and CEO of United Way of Salt Lake. He serves on United Way's Worldwide National Professional Council and the Governor's Education Excellence Commission in Utah. Previously, Mr. Krim served on the Utah State Workforce Investment Board, and he's been a research fellow for the Coalition on Human Needs here in Washington, D.C. Welcome, Mr. Krim. Next, we'll have Dr. Una Osili, who is Professor of Economics and Associate Dean for Research and International Programs at the Indiana University Lilly Family School of Philanthropy at IUPUI. Dr. Osili oversees the research and publication of Giving USA, an annual report on American philanthropy, as well as the Index of Global Philanthropy and Remittances and Index of Philanthropic Freedom. Thank you for being here, Dr. Osili. We appreciate you both joining us today. Mr. Krim, you're now recognized for your testimony.
Thank you, Chairman Lee, Vice Chairman Beyer, members of the committee. I deeply appreciate the opportunity to come before you to talk about the work of the charitable sector in our country, our response to the COVID-19 crisis, and the role that tax policy plays in driving private giving. United Way of Salt Lake builds cross-sector partnerships that work to solve our community's most complex social and economic problems. Within these partnerships, we hold ourselves accountable to results that no single organization or sector can achieve alone. Our commitment to creating lasting change and helping all kids and families succeed regardless of their circumstances holds especially true during this time. As we continue to address the health and economic impacts of the pandemic, and as we are all called to address the urgent need for racial justice in our country, we know that the role of nonprofits, of faith organizations, and of charitable giving is critical. Over the past 3 months, hundreds of individual Utahns have generously risen to the challenge of supporting our community. In addition, key business partners like Goldman Sachs, Mark Miller, Zions Bank, Savage, and many others have contributed to this work. This generosity has allowed us to respond to dramatic increases in contacts through 211, which provides information and referral to those in need, to provide critical support to dozens of our community partners meeting essential basic needs, and to develop a comprehensive initiative to address the dramatic learning loss experienced by so many students over the past 3 months. We know that the reasons for giving are highly personal, but I can assure you from firsthand experience that people give to charities for altruistic reasons. Sometimes this selfless concern for others is driven by faith or simply a desire to give back to the community. Often, and in our case, it is because people believe that by working together, we can solve our community's most complex problems. But tax policy does influence people's behavior, from business investment decisions to buying a home. This doesn't mean that every person is influenced by tax policy, but large numbers of people are. Charitable giving is the most discretionary financial decision someone can make. Good tax policy might be the nudge that someone needs to make their first donation, or it might prompt a longtime donor to give a little more. Consider, for example, a person who gives $500 per year to charities. If they pay taxes at a 20% rate, that means they are paying $100 in taxes on that money that they are giving away. Setting aside the fundamental unfairness of taxing income that's being donated to help others, those taxes may prompt a smaller donation from some people who aren't in a position to give anymore. Conversely, if Congress were to relieve tens of millions of Americans from taxes on income they donate, it's not hard to imagine the positive impact on charitable giving. I'm definitely not an economist or a tax policy expert, but I know that studies have consistently found that good tax policy will drive more giving. That includes increased giving by people who make small donations. United Way's, basic needs charities, faith-based charities, and disaster relief charities rely heavily on small donations from large numbers of people. In our case, we raise about $15 million per year in Salt Lake, but our average individual donation is $229 per year. Those small donations add up. Nationally, United Way's raise over $1 billion per year from small donors who give an average of $155 per year. Of course, in my view, the ideal federal tax policy would be to permanently relieve all taxpayers from paying taxes on income they donate to charity. That could happen through an above-the-line exclusion or a non-itemizer charitable deduction combined with the existing deduction. But we understand that that may not be viable at this moment. But a temporary non-itemizer deduction could be instrumental in helping charities help our communities and those impacted by the crises facing our country. We understand Chairman Lee, Senator Klobuchar, and others are supporting a temporary deduction modeled after Senator Langford's and Congressman Walker's legislation. We think that legislation would provide a much-needed infusion of donations directly to the charities that are leading the COVID-19 response and recovery efforts. The recovery efforts by charities will go well beyond 2020, so the longer this legislation is in effect, the better it will help us support our communities and those who have been affected by COVID-19. As I close, I want to note that several members of this committee have supported and personally donated to their local United Way, and others have played a significant role in raising donations for their local United Way. On behalf of our entire network, I want to extend our deepest thanks to each of you. Mr. Chairman, I'm happy to answer questions.
Thank you. Thank you very much, Mr. Krim. Dr. Rosalie, we'll go now to you for your opening statement.
Chairman Lee, Vice Chair Byer and distinguished members of the Joint Economic Committee, thank you for the opportunity to testify today. The IU Indiana University Lilly Family School of Philanthropy has tracked crises and disaster giving since September 11th, 2001. I will share initial evidence about philanthropy's response to the COVID-19 pandemic. Through good times and during times of crisis, American philanthropy, which includes donors at all income levels and racial and ethnic backgrounds, has collaborated to fill gaps where governments and markets face limitations and provide capital for innovation and meet material and spiritual needs. Philanthropy, defined as voluntary action for the public good, is a core value, a central way for Americans to contribute to the vitality and strength of their communities. In 2018, Americans donated about $427 billion to charitable organizations, of which 68% came from living individuals. Four aspects of the philanthropic response deserve close attention. First, the COVID-19 pandemic has induced twin crises, and Americans are grappling with unprecedented health and economic shocks. African American and Latino populations have been disproportionately impacted, exposing deep racial and structural inequities. In response, we've witnessed tremendous individual giving during the COVID-19 pandemic to charitable organizations, but also mutual aid to neighbors and friends. Beyond individual giving, U.S. foundations and corporations have contributed over $11 billion to the COVID-19 response based on Candid's estimates. Second, philanthropy's innovative response has included cash and in-kind donations from everyday citizens and donations from wealthy donors. Crowdfunding campaigns, typically driven by small donations, have expanded in their reach and impact. One of the most extensive GoFundMe campaigns, America's Food Fund, has raised over $26 million to combat food insecurity, and the CDC Foundation has raised $50 million on charity.com. Third, in the wake of the COVID-19 pandemic, we've also seen philanthropy as a unique collaborator and facilitator of collective action in local communities. A research initiative led by Dr. Lori Paulberg at the Lilly Family School is tracking philanthropy's facilitator role at the local level. As of May 15th, her mapping project estimates that community funds in cities and towns across America have raised $634 million and distributed at least $376 million to address critical needs created by the pandemic, including food insecurity, mental health, and emergency financial assistance. Finally, we've seen philanthropy tackle systemic issues of inequality. In Michigan and here in Indiana, a collaboration of philanthropic organizations in each region rapidly joined forces to supply computer tablets with high-speed internet connectivity to address the digital divide for K-12 students. The initial response to COVID is unprecedented in its speed, size, and scope, and nonprofits of all sizes have risen to the challenge. However, the need for private philanthropy is rising as many more people and communities need support, and at the very time when the ability of many donors to give is challenged. Research has long established that charitable giving is linked to national and regional economic trends. A concerning trend is that the share of American households that give to charitable organizations has declined significantly, from 66% in 2000 to 53% in 2016. Declines in participation rates among low and middle income Americans, as well as younger Americans, have been evident since the Great Recession. This trend of declining participation has implications for the strength and vibrancy of civil society. Over time, tax policy has also provided less tax recognition of the giving by all Americans, especially the giving of low and middle income Americans. The charitable deduction is one of the oldest tenets of the U.S. tax code and affirms the value our society places on voluntary giving. The school has analyzed the impact of various policy options. Our studies project that extending the non-itemizer deduction could increase charitable giving available to nonprofits by up to $26 billion, an increase of about 7.7%, and also increase the number of donor households by an increase of 8.2% in 2021, enabling a fairer, more inclusive, and more engaged civil society. To meet the complex challenges triggered by COVID-19, creating tax incentives that encourage the generosity of all Americans, including lower and middle income households, is a vital step in the recovery, given the mounting needs of families and communities. Thank you for the opportunity to testify today. I would be happy to respond to any questions.
Thank you very much to both of you. We're going to now start into 5-minute rounds of questioning. I'll go first, then we'll go to Vice Chairman Byer, and then alternate between Republicans and Democrats after that. Mr. Krim, we'll start with you today. The Social Capital Project at the Joint Economic Committee has done extensive writing and research about excessive government regulation and its tendency to act as sort of a drag on nonprofit and charitable activity, as well as government programs crowding out various civil society activities by effectively assuming civil society's functions. In other words, when government steps in the room, it tends to consume so much of the oxygen that it tends to crowd out others. Mr. Krim, have you seen examples of either of those phenomena occurring recently in the recent coronavirus policy response?
Boy, I would say in the recent months, what I have seen in Utah is a remarkable coming together of the private sector, led by businesses, of the charitable sector, and of government, all, I think, staying in their lane, all listening to each other and looking for ways to add value and to get results in this moment. I do think what you're describing can happen, and it certainly does. But in the coronavirus response, I have not seen examples of government overstepping here in Salt Lake or in Utah.
I'm glad to hear that, and that is heartening to hear. But it sounds like you're acknowledging this can happen. It's a phenomenon that we have to be aware of and we have to watch out for. But I'm glad to hear that you're not seeing it yet. Mr. Krim, what do you think policymakers ought to do to avoid crowding out charitable relief efforts while also ensuring that the needs of Americans are met? Are there some guideposts that you point to for us as policymakers to help make sure that we don't create this crowding out effect?
Absolutely, and I would want to answer that question in part by observing that in our view, none of the problems that we have been talking about today and that we all care about can be solved by one sector alone, certainly not by one organization or set of nonprofits or their programs. And our view is that it requires deep partnerships of community members and their voices leading the way, of nonprofits and government and private sector working in concert with one another. And I think the way to drive that and prevent what you're describing, I think, is to incentivize partnership within government funding. So if the policy that is being driven by the federal government or by a state government acknowledges that the problem it hopes to solve requires this kind of civil society and engaged partnership and highly effective collaboration and accountability for results, it seems to me like we could incentivize that partnership or require it in some cases as appropriate, so that programs don't happen in a vacuum. They don't create that crowding out effect that you described, because there's a community-led, community-based infrastructure set up to help everybody work together in a way that allows each sector and each organization to play its best role.
Thank you, Mr. Crum. Dr. Osley, I wanted to ask you a question about an interesting set of facts that we have that are somewhat unique to our circumstance right now. The 2019 tax year filing deadline has been moved back to July 15th. In light of that fact and in light of what we're going through right now, it seems to me that we've got an interesting opportunity. If we could enact legislation in the next few weeks, making a change to allow people to add to their 2019 tax liability this function of what they donate this year and count that toward 2019. What effect would that have on charitable contributions right now, given the timing of when charitable donations have been made in the past and given this unique circumstance of the coronavirus-related lockdowns and the extension of the filing deadline? Dr. Osley, I think you might be muted. We can't hear you.
Okay, thank you, Chairman, for your question. And I do agree that this is an important opportunity to recognize the generosity of all Americans. The point that you raise is a good one. Tax salience is a theory and actually has been found to affect the behavior of Americans. And providing that tax incentive now rather than later could stimulate additional giving. In addition to the work that I cited in my testimony, we do know from previous disasters that a large number of Americans contribute to disasters. As an example, in the 2017 Hurricane Harvey and 2018 series of natural disasters, 30% of Americans gave, and the average contribution was about $300. Given the scale of this pandemic and the fact that it cuts across all communities, providing that tax recognition now, as well as in the future, I think it will be important given the timing of this crisis and the length and severity.
Thank you very much. My time's now expired, so now we're going to go to Vice Chairman Byer for his round of questioning. Vice Chairman Byer.
Chairman, thank you. Chairman Lee, thank you. To our witnesses, the CARES Act that we passed, part of our coronavirus response, expanded the charitable giving caps for individuals and corporations. So individuals are now able to deduct up to 100% of their adjusted gross income in 2020. It was 60%. And corporations saw their cap lifted to 25% from 10%. Dr. Osili, should we also be looking at foundations? Right now, the minimum foundation distribution every year is 5% of assets.
Vice Chairman, apparently your video feed is off. I just wanted to let you know that. That's okay. You're free to participate with it off. I just wanted to make sure that was deliberate and not accidental. Go ahead.
Thank you, Senator. It was not accident. It was whatever. To Dr. Osili, on foundations, 5% right now. Should we consider doing a 10% minimum distribution per year? And what kind of impact would that have on the nonprofit sector?
Excellent question. I think the CARES Act does go far in recognizing the generosity of corporate America as well as individuals. And as I cited in my testimony, we have seen significant response from corporations, especially at that $1 million level. We have also seen significant investments by foundations across the country. And I think we've also seen from prior research that foundations tend to give in a counterparts during tough economic times. Foundations tend to increase their giving. We saw that during the Great Recession. So certainly incentivizing all forms of generosity during this time, I think would certainly move in the right direction in helping Americans cope with the scale and, as we said, severity of this current crisis.
Okay, thank you very much. When we make changes to the tax code, we're trying to find ways to incentivize, changes at the margin. So we don't want to reward people with a tax benefit for actions that they're going to take already, because it doesn't, would cost the government money that we can use on other things. So when it comes to charitable deductions, some would argue that we should give tax benefits only above levels at which we expect people would give. And for example, I guess there's some data that suggests the average person that gives would give up to 2% of their AGI. And this would reduce the cost of the benefit a lot. How do you react to that notion that we create tax incentives beyond the 2% per year that they would be expected to give?
I think those are all very important points, and there have been very significant debates about the limitations of the CARES Act. In other words, could it go further? Some have argued that the limit currently is too low at $300. Others have charged that the primary beneficiaries are mostly higher income households. It's important as we think about other policy options to address a lot of the issues that I think the chairman already touched on, looking at the fraction of Americans that donate, the size of the charitable response, as well as some of the distributional consequences. In other words, tax equity. We want to reward generosity across all Americans, lower income, middle income, and wealthy households, understanding that all Americans play a role. To this end, the school has conducted a very detailed study of all different sets of options. In fact, we considered 5 different policy options, and these policies actually differ on their impacts on the number of donors. In other words, how many people would actually participate, the amount that would be raised, and the cost to Treasury. The good news here is that all of the options that include extending the deduction to non-itemizers would actually forgo less in tax revenue than it would bring in charitable dollars. In other words, a small impact on the Treasury while boosting overall charitable giving. Just to give you, I think some of this was covered in my testimony, but one of the examples that I cited, extending the non-itemizer deduction would bring in an increase of 7.7% in charitable dollars, would increase donors by 8%, and the Treasury revenue impact is relatively small, reducing revenue by 0.6%. So we've considered the various options and looked at the impact on donation levels, participation rates, which are very important. We want to encourage tax recognition for all Americans. And then finally, the impact on Treasury as well. So I think all of those have to be considered as you investigate what the best set of policy options are. But one principle that I think is important to keep in mind is that Americans of all different backgrounds participate in charitable giving. We want to pursue policies that actually recognize that spirit of generosity across the income spectrum.
Well, I'm certainly excited about your first ever Institute for Studying Philanthropy, and obviously you're bringing a lot of that to us today already. So, Mr. Chairman, I yield back.
Thank you very much, Vice Chairman Beyer. Up next is Representative Herrera Butler. Representative Herrera Butler, make sure you're not muted and make sure your audio and your video feeds are on. Okay, Representative Herrera Butler, we'll come back to you. Next, we'll go to Representative Schweikert.
Hi there, and thank you, Mr. Chairman. It's an interesting subject. Having been someone that actually worked on the tax reform and some of the data we were seeing, Doctor, can I ask you to you shared with us in your opening testimony some of the information from, what was it, 2000 to 2016?
Correct. The data that I cited is based on the Philanthropy Panel Study. It is a module on the panel study of income dynamics of American families, the longest and most comprehensive study of philanthropy that's ever been conducted of American families. And that data allows us to study over time how American philanthropy is changing. And because we're able, that's the beauty of longitudinal data, we're able to assess over time for the same group of households. We've seen that declining rate in the participation of American households. In other words,
and you're actually coming to exactly what I wanted to get my head around, because this is prior to tax reform, we had had some presentations a couple years ago of discussions of that there was going to be changes. There were changes being observed in participation, somewhat because of demographics, somewhat because of income squeezes in a couple of the lower income quartiles. When you talk about, and what was that, close to a 10-point drop over that study's time? How much of that, where did that drop fall? Was that in people of more modest incomes? Where was the drop coming from?
Very good question, and thank you for following the research so closely. We have examined in great detail where the drop came from, and about half of the drop can be attributed to income, decreases in income and wealth. So we found it mostly for lower income and middle income Americans, but also among younger Americans and individuals with less education. This trend was accelerated by the Great Recession. The Great Recession did have the impact of reducing further the participation rates of Americans. The overall trend, the way we tend to describe it, is donors down, but dollars are up or holding steady. And so one of the challenges as we look at all of the factors that you've cited, demographic change, changes in our social and economic life, and also changes in religious attendance, we are seeing this declining rate. And the challenge, of course, especially for younger Americans, to make sure that we can encourage that habit of charitable giving, which has been such a hallmark of American life for centuries.
It's actually a very interesting point. And Mr. Chairman, and for others who have an interest in this area, some of us who spent some time looking at this, we were already seeing a trend, and it may have been tied to lower quartiles incomes, their true purchasing power, you know, the squeeze that we were seeing in our society. And there was many of us who had hoped, as we saw income move up in those populations, as we were seeing before, you know, the pandemic, it's not a long enough time frame to see, was there a change in those more modest incomes, participation in sort of a level of personal philanthropy. But as we work on policy here, I think we got to be very careful to sort of see the world in the last 3 months or the last 2 years. And it might be much healthier to sort of look at this over the last 20 years of what is the trend in income distribution and who is giving money to charity. Also, some of the things we were seeing, and I wish I had made some charts for this conversation, of demographics, of how much of our population was moving out of the workforce because of getting older, and what sort of contributions of cash instead of contributions of time and talent. So this may be one, before we really make some big policy approaches, we may need to much better understand the data.
Absolutely. I think you raise a very good point about demographics, and that's one that here at the Lilly Family School we've been watching very closely. For younger Americans, one of the key issues is also charitable giving tends to be one of those habits. People who give, many of them give year over year, or they may stop giving and then start up again. And one challenge we have is for many younger Americans, they entered the labor market around the Great Recession. Many of them faced economic challenges and a lot more income insecurity, perhaps, than generations before them. And so for that cohort, one of the questions is, how do we encourage charitable giving for that younger cohort, understanding that they will then start to promote giving, become regular givers, and ultimately perhaps pass that on to their children, because giving is also something that we do see closely linked across families. In other words, parents tend to transmit generosity to their children.
Doctor, one last question, and I appreciate everyone's patience. Senator Langford sort of touched on this, that, and I see this in the world around me, that many of the younger, my millennial relationships and acquaintances, they do more direct type of contributions, the GoFundMe type of pages, the much more community centric. Does that type of contribution hit your data point? And are we seeing just a societal trend different in how they contribute to on an individual basis instead of larger charitable organizations?
Those are both excellent observations. We are seeing giving expanding, and even during the pandemic, we've seen giving of all forms, giving to nonprofits, but also giving to crowdfunding campaigns. What's interesting to note, however, is that even traditional nonprofits are starting to use crowdfunding to raise funds. And that's why I mentioned the two very prominent examples that have raised the most dollars on GoFundMe are actually nonprofits, such as America's Food Fund. And similarly, the CDC Foundation, a well-established organization, dates back to 1992. The foundation itself has also launched a crowdfunding strategy, raising up to $50 million on a new platform. So we're seeing a hybrid of both the new and old kind of blending together during the pandemic.
And Doctor, the one thing I was trying to chase down is, do we see a difference in the age group that will go and contribute through a GoFundMe? And as we're seeing younger reducing their charitable participation. Is there a chance there's some of their charitable participations just using different platforms?
I think that's a very good question, and one that we're studying very closely. Initial evidence does suggest that younger donors tend to use social media, and a lot of those crowdfunding platforms are driven by social media.
Doctor, thank you so very much. And Mr. Chairman, I yield back.
Thank you. Thank you very much. We'll go now to Representative Trone.
Thank you, Mr. Chairman. Dr. Asali, supporting charities and the people who depend on them through the pandemic and beyond requires a comprehensive approach. CARES Act made charities eligible for the PPP and the Employee Retention Tax Credit. The HEROES Act would dramatically increase the Employee Retention Tax Credit from 50 to 80% and increasing the wage cap. Beyond these immediate programs, do you have any other recommendations additional that the legislative support be most beneficial to U.S. charities, whether they're working here or even internationally?
One of the points that I think my fellow panelists mentioned is the importance of collaboration during this time. And I do think as government looks at how to support the nonprofit sector during this time, incentivizing collaboration with partnerships could be another way of supporting nonprofits. I think the government already does a fair amount of that in international relief, but looking at ways of doing that. And I would add, also incentivizing innovation. In other words, nonprofits that are solving very complex problems, having the support of government funding to pursue some of those breakthrough solutions in communities around the country.
Okay, great. Looking down the road, should the legislative branch consider a permanent restoration of tax deductions for charitable contributions, recognizing that these come at a big cost in the reduction of tax revenue, or the more effective and cost-efficient ways to support these organizations and the important contributions to their communities?
Being an economist by training, I do think it's important to look at the cost of various policy options. When it comes to the charitable deduction, we do have significant evidence that when properly implemented, the tax deduction stimulates more in charitable dollars, or at least as much relative to its cost to Treasury. And as we have researched the impact of expanding the charitable deduction, what we've seen is that encouraging the generosity of Americans during this time, but certainly into the future, is something that will help build our civil society. And especially as we're seeing this declining participation rates, will encourage Americans of all backgrounds to continue this tradition of civic generosity.
That's good, thank you. What trends are you seeing in the data that you think we should know about and factor into legislative action to support our charities, particularly during the pandemic? And what are we not looking at that we should be?
I think several of your colleagues have brought up very important points. One advantage of philanthropy during this time is the speed and the ability to respond to local problems. One area that I do think deserves close attention is the work of community foundations and community funds. The scale with which they and scope with which they've acted already, I think, is worth noting. Finding ways to partner at the community level, especially in really affected regions, could be very beneficial at this time.
Okay, thank you, Doctor. I yield back, Mr. Chairman.
Great, thank you very much. We'll turn now to Representative LaHood. Representative LaHood, you're now recognized. Make sure your mute button is off and your video feed is on.
Okay, can you hear me, Mr. Chairman?
Yes, yeah, hear you fine. Oh, there we go. Go ahead.
Thank you, Chairman Lee, for holding this important hearing and co-chair Byer. And I want to thank the witnesses for your valuable testimony today on this important topic. And just will acknowledge the important role that our charities and nonprofits play in our communities all across our country. And they've particularly been highlighted during COVID and the reliance. And I think in my own community, as I've been traveling around my district in central and west central Illinois, the Midwest Food Bank, which has been helping with food and nutrition programs throughout the country in my district. Obviously, the Salvation Army has been very engaged, and the Peoria Dream Center in my community here, helping with shelter and clothing and the health needs of our community. And as was referenced earlier, when we think about the social safety net of our country, obviously family is first and foremost, but nonprofits play a significant role, and obviously government does too. But I think one thing we've learned in our response to COVID from the federal level is we're not going to spend our way out of this from a government standpoint. And so when we look at our charities and our nonprofits, how do we incentivize? How do we stimulate? How do we assist using the tax code in a proactive way to help those charities and those nonprofits? And so having this hearing today and the valuable testimony is a part of that moving forward. So thank you for having it, Chairman Lee. Very, very important. And I may, I'd like to maybe ask the doctor, what have we, in terms of COVID and the impact that it's had on our country over the last 10 or 11 weeks, what have we seen in terms of a reduction in giving to COVID, and what are the projection in terms of losses related to that moving forward?
So it is too early to tell at a comprehensive level what the impact of COVID has been on fundraising revenues so far. We did conduct an early survey in March to a national sample of nonprofits and found that nearly 80% of them had encountered some disruption in their plans around whether it was canceled events, canceled fundraising programs. However, what we've also seen in the data is that the impact is not going to be uniformly felt across all nonprofits. Some sectors will be affected to a greater extent than others. As an example, arts organizations are particularly vulnerable during an economic downturn. And in this crisis, various streams of revenue for arts organizations has been disproportionately impacted. As an example, fundraising revenue may be down, event revenue may be down. Similarly, if you look across the nonprofit span, there are over 1.3 million nonprofits in the US, but we've seen that in economic downturns, some nonprofits are more affected than others. So that's, I think it's too early to say exactly what the impact will be on the charitable dollars, but it's already apparent that some nonprofits are being hit harder than others.
Thank you for that. Just as a follow-up, so obviously we've talked a little bit about tax incentives and direct financial assistance. Are there other federal policy recommendations that we should focus on beyond those two, Doctor?
Those are all very good points. Looking back at periods of crisis and how nonprofits have fared, I think what we've seen already is that putting together various types of policies can be very important, but also tailoring some of these policies to specific sectors can be important. For example, right now we know that health and human service organizations are particularly impacted. So looking at the impact of those sectors can also be beneficial.
And lastly, how does, maybe if you could comment on how state or local governments play a role in supporting our nonprofits and charities?
Very good. So across the country, that's a great question. We know that states and local governments are also at the front lines of this crisis. And our tax code, we have a federal tax policy, but we also have many communities and states have local and state level credits for different types of contributions. There've been a number of studies on this topic. One of my economist colleagues, Dr. Nicholas Duquette at USC, has an academic paper that looks at the impact of these various credits. And some of them have been effective in actually stimulating charitable giving more so than others. And so I think that would be a place I would ask the committee to take a look at, sort of looking at specific policies that have been more effective in various parts of the country, Arizona being one, Michigan is another one, but taking a look at some of those options and how perhaps some of those can be built upon.
Thank you, Doctor. Those are all my questions. Chairman Lee, thank you for the hearing today, and we look forward to working with you on coming up with policy recommendations and potential legislation on this topic.
Thanks, Representative LaHood. We'll turn next to Senator Hassan.
Thank you, Mr. Chair. Just checking that everybody can hear me.
Yes, we can hear and see you. Thank you.
Excellent. Thank you, Mr. Chair and Vice Chair Byer, for holding this hearing today. And I would also like to thank our witnesses, Dr. Osili and Mr. Krim, for appearing before our committee. I also want to thank Senators Shaheen and Langford for their leadership in supporting nonprofits. To Dr. Osili, you have spoken before about how the nonprofit sector fills in gaps between services offered by government and by the business community. That's exactly what I've seen in New Hampshire throughout this crisis. Nonprofits in my state have stepped up to meet new needs for housing, healthcare, employment, and education services, while also modifying existing services to limit the spread of COVID-19. Could you explain to the committee how nonprofits are uniquely positioned to use flexible and innovative services to fill in these gaps, especially during the COVID-19 public health and economic crisis?
That's an excellent question, and I appreciate the opportunity to shed light on this. I mentioned in the testimony, we have two very prominent examples nationally. When public schools transitioned from bricks and mortar schools to e-learning and virtual learning, it was quickly apparent that many children, K through 12 students across the country, did not have access to high-speed internet connectivity or tablets or computers in their homes. And private philanthropy stepped up very quickly within a matter of weeks to make sure that children affected by those shutdowns, which took place very rapidly, had access to a tablet or a computer and internet connectivity so that they could resume their studies. That was really something that made a difference during the pandemic. And I think it speaks to philanthropy's flexibility and ability to work in partnership with local governments, because the philanthropists had to work with the school districts as well as the business sector that stepped forward. This is a uniquely, as we've said, a unique aspect of American society. That's one example. We've also seen in the health component where many companies, foundations, and individual donors stepped up very quickly to provide PPE for health workers, to provide and expand rapid testing, and in some cases to actually fund research. We saw that in California and in Seattle, in the Washington area. Oregon is another good example. And then even here in my home state of Indiana, private donors worked very rapidly. That would have taken longer for government to pass a bill to get those funds and to the PPE in the hands of the health workers. So I think this is an example where we see the strength of philanthropy and the importance of this sector in the face of a crisis.
Well, thank you. And I also wanted to give Mr. Krim an opportunity to answer the same question. Mr. Krim, how in your experience are nonprofits filling gaps in services during COVID-19?
Well, maybe not surprisingly, I would echo many of the same things that you just heard. I won't take up too much time, but to say that what I've noticed is that the speed with which a nonprofit or a group of nonprofits can rally around a problem is super important. It's often the case that they can't scale their solution sufficiently. So we saw similar work going on in terms of broadband access around distance learning, but we're still quite certain that 50% of kids in many of our communities did not have a reliable connection to their school. So I think to solve these problems, we have to sort of rely on the speed and the nimbleness of nonprofits and the scale and capacity of government.
Yep, and that's been my experience in New Hampshire too. So thank you for that. And then Dr. Osili, I wanted to give you a chance to expand a little bit on a topic that was just raised in our last round. The testimony we've heard today underscores how crucial it is that Congress assist nonprofits that are on the front lines during COVID-19. Although the congressional response so far has ensured that nonprofits have access to the same economic relief as businesses, significantly more needs to be done to help these nonprofits stay on firm financial footing. I'd add so that they can continue to do the kind of work that both of you have just described so well. Several colleagues on this committee, including Senator Klobuchar, are leading important efforts to provide direct financial assistance to struggling nonprofits. Given the unfortunate delay in nonprofits getting access to the Federal Reserve's Main Street loans, the need for this assistance is all the more urgent. Dr. Osili, between dramatic growth and need for nonprofit services and significant decline in financial resources, could you explain how the COVID-19 crisis is affecting nonprofit operating budgets?
Thank you. As I mentioned earlier, we conducted a study early in the pandemic, so we know that this is a fast-changing landscape. And with a national sample of nonprofits, we found that 80% of them had encountered some sort of disruption to their overall planning. 50% said canceled fundraising events were a big part of their projections. And as they looked ahead, some anticipated a decline in their fundraising revenue, while just currently, but also in the future. So I think all of this data taken together suggests that the shocks that our country has encountered have hit the nonprofit sector as well. And as I mentioned, some have been disproportionately impacted. I think there isn't a one-size-fits-all solution when we talk about nonprofits. We have to look by sector and also regional as well.
Well, thank you. And Mr. Chair, I see that I'm over time, but Mr. Krim, my staff and I will follow up with you as well, just to make sure we get your input on that same issue. Thank you.
Representative Herrera Butler, you're up next.
All right, thank you. Can y'all hear me?
Yes, we hear and see you fine. Thank you.
Thank you. I have had I've had a sick kid this morning, so I've been like checking in and out of this, but it's nice to be able to come in towards the end. And I apologize if some of this has been covered, but for my benefit and some of the things I've been talking about with nonprofits and not-for-profits here in Southwest Washington State, I wanted to ask a few things. The last question, so obviously small businesses have stepped up in amazing ways, and they've played roles where traditional business or communities or even government couldn't step in, and they were able to respond quickly, which is what we want and need, which is why we have made a lot of the relief available to Main Street available to nonprofits. One of the questions that keeps coming up is, do we feel or do you feel that we should be treating donations differently from a policy standpoint based on the type of entity receiving the funds? I know the devil's always in the details, but these are the things we're being asked to figure out, and I'd love to hear your thoughts on that.
Thank you. And I am answering this question as a professor of economics, as well as philanthropic studies at Indiana University. One thing to keep in mind about American philanthropy is that it's really an expression of democracy. Several analysts and commentators have noted American philanthropy, starting with Tocqueville, about the ability of Americans to form associations and the fact that they form these associations across different sectors, different types of organizations. And that plurality is one of the strengths of America's philanthropic sector. So as we think about shifts in tax policy, I think that creativity, innovation, and resilience that we've already seen has actually been part of America, the fabric of America's philanthropy. So I'm not sure that we can have both. In other words, encouraging that plurality, providing benefits that accrue to different subsectors does have benefit. At the same time, you could also see some arguments that in this crisis, there are some organizations that are at the front lines of the pandemic, health organizations, disaster relief, but then all kinds of nonprofits are involved in this crisis. If you look at educational institutions, many of them are having to grapple with new ways of providing their services. Many religious congregations are standing up entire operations around food insecurity or domestic violence. So we do see that many organizations, many different types of organizations are involved in pandemic relief, and the strength of the sector has been in its plurality, an expression of democracy, you could say.
Any thoughts? I don't want to cut him off.
I would agree with that observation and just point out from a personal level, one of the beautiful things about philanthropy in the United States is the ability of someone to express their values and their passions through their giving. And I think that happens naturally the way things are.
I think, I was on the phone with a local not-for-profit involved in the arts, local theater. And, depending on the different type of nonprofit you're talking about, they were either, pushed to the forefront of our consciousness in our communities, or they were kind of pushed to the back based on what was happening. You mentioned churches who were kind of doing wraparound services for frontline providers. Well, there are others who I think have just as vital a role to play in our community, but obviously aren't going to be top of mind, and trying to figure out how to protect and keep some of those folks afloat in the middle of this has been a bit of a challenge, at least in our communities. And that does bring to mind another question that I've had. And, I almost hesitate to bring it up because obviously we've been talking about the vital role that not-for-profits. I mean, that was one of my first jobs, was working for a nonprofit with regard to young people. And I did development, and it's a thankless task, but you do it because of the cause. Like it's the most amazing thing to be a part of. But we do have some entities who are abusing their nonprofit status, laying off employees, right, despite significant endowments, in addition to tax-exempt status. And how can we support and encourage charitable giving while ensuring that we are setting the stage to kind of call some of those into accountability? It's not as fun of a question.
That is certainly a challenging set of questions, and we face that across all sectors. I don't think the nonprofit sector is unique in that respect. I think some of the same standards and policies that have been applied in the CARES Act for other types of entities could also be extended to nonprofits, and similarly incentives to retain staff and navigate the crisis could also be introduced. So I do believe that the issue of perhaps fraud or accountability and transparency does cut across all sectors, but particularly in the nonprofit sector, trust is a really important factor. That's the glue that holds the sector together. And so as we think about incentives, keeping that trust and accountability in mind, I think is important.
Thank you. And I see my time is up, so I yield back. Thank you.
Thank you so much. We are now going to start a second round. For any of you who would like to stay with us, you're free to stay on. Feel free to drop off if you don't have any interest in participating in a second round, but we'll go ahead and begin that now. Mr. Krim, let's go back to you for a moment. I think all Americans have been affected by the pandemic in some way or another, but Americans who were disadvantaged economically and otherwise prior to the pandemic are experiencing greater hardship compared to those who are more educated or have more resources or had more income prior to this issue surfacing. What are some of the specific ways, Mr. Krim, that charitable giving and, by extension, charitable organizations have met the needs of low-income or less educated Americans during the pandemic?
Well, I think what I've seen is that in much the way I think Dr. Osili talked about, the research shows money in a crisis flows to basic needs. It flows to the urgency that people see. And we see that in our own experience, that philanthropists and individual donors and corporations, that people rally when there's a need. And nonprofits provide a vehicle to quickly get those resources to those with the greatest needs. 211, which is a national infrastructure connecting people to the services that are available to them statewide in Utah and in most of the country, does a pretty good job of, in real time, assessing what are the needs that people are calling about or searching for online. I think there's more responsibility we all have, though, to think about recovery in an inclusive way, to think about creating structures and systems and filling gaps in the long run that try to mitigate the problem that you just described so well, so that the next time there is a crisis, whether it's a natural disaster or a health crisis, maybe we are a more equitable society. Maybe people have a better capacity to weather a storm. And so in our community, there is an overt conversation going on about inclusive recovery, and how do we create systems, whether they're education systems or economic systems or health systems, that think about the disadvantage and the inequity that existed before the pandemic and try to create something new going forward.
Thank you. And then on a related point, Mr. Krim, we know that the pandemic has in many cases and in countless ways increased the demands on churches, schools, nonprofits, and other institutions of civil society. And we know that at the same time, and for the same reasons, the same underlying reasons, it's also reducing donations as people are feeling more uncertain about their future and less inclined to give. Do we know how much the pandemic may have affected donations to charitable organizations?
I don't have data that is sector-wide or even beyond our own organization. I can say anecdotally that we've seen both a loss in donations, in individual donations, and overall planned revenue. We've seen unexpected increases in some revenue directed towards pandemic relief. And then we've seen, some visionary philanthropists really thinking, as I mentioned before, about inclusive recovery. How do we change a system to make it more equitable for kids, for example? How do we, is there a way to tackle the broadband issue that's not piece by piece, family by family, but that really thinks about the future of our economy and people's ability to participate in that economy, that starts with equitable internet access, broadband access.
Do you have any idea about what types of organizations might have been most affected by reductions in charitable contributions? You say you've seen some revenue loss, meaning donations overall, I assume, are down. Don't tell me anything that's sensitive, but you have any sense as to who's getting hit the hardest in the charitable world?
My anecdotal sense, and I would defer to Dr. Osili for hard data is that it's organizations that are not directly on the front lines of pandemic relief, and or really small organizations that don't have the infrastructure to sustain their fundraising efforts in a different kind of way.
Dr. Rosalie, what's your reaction to that question? Do you have any sense as to what types of organizations have been most affected by reductions in charitable giving?
Yes, so we have some very strong evidence from the Great Recession. During the Great Recession, we saw human service organizations, charities, actually experience an increase in their fundraising, in their charitable giving, whereas other sectors, for example, the arts and culture organizations, in some cases, environmental groups, actually saw a decline. So very similar to Mr. Krim's observation that organizations that were serving basic needs at the front lines of the, this case, it was the economic crisis, saw an increase in their charitable giving, whereas organizations that were less involved in responding to basic needs and emergencies saw a decline. Just a small piece of data that I shared earlier, as I mentioned, 80% of the national sample that we surveyed had already seen some disruption in their planning for this year. And for many organizations, it was the cancellation of fundraising events. And that was fairly widespread, but tends to be concentrated in some sectors. And I mentioned the arts, but other subsectors that rely heavily on charitable events, walks, runs, all those types of fundraising activities that have been canceled.
Thank you. Vice Chairman Byer, you're up to bat next.
Mr. Chairman, thank you very much. Dr. Asili, I can't tell you how many Saturday nights back I have now that all those fundraising events have been canceled on Saturday nights. You know, I lived overseas for 4 years, and one of the great surprises in Europe was that they don't have this tradition of the nonprofits or the charitable giving that we do. You know, that we're sort of raised with it, the whole idea of raising the barn or all the community coming together to bring in the crops. It just doesn't seem to exist over there. And one of the things that I've enjoyed learning on this Joint Economic Committee with Chairman Lee's help is the incredible role of social capital in our American lives. Constantly pushing my kids to be ever more involved in the community, and that we begin to think about measuring our own wealth by virtue of the social capital that we have in the community that we live in. And at home, I find that I'm measuring their social capital by the strength of the nonprofits, that the more robust they are, the greater the sense of community and social capital that we all have. So I guess my question both for Mr. Krim, who's been doing this for decades, and for Dr. Asili is, how do we nurture this commitment to nonprofits and to building our social capital?
Well, I'll start by saying, I think you mentioned starting with your kids, engaging kids in volunteer work, creating volunteer opportunities, bringing people together to address challenges collectively, I think is one way to do that. I think communities that try to build social capital not only when there's a crisis, but that really look for ways to overcome sometimes the inadvertent divisions that occur and sometimes the overt divisions that occur in communities is super important. I'm sure those of you who study this are well aware of the different kinds of social capital, the bonding social capital, where we connect with people who look like us and think like us and maybe are in our same income bracket. That's a type of social capital that's relatively easy to create, but I don't think that's what makes our country the strongest. What makes our country the strongest, I think, is bridging social capital. It's the social capital we build across differences and that allows us to come together and do hard things.
Thanks. And Dr. Asili?
I'm glad you raised the point about international differences. Here at the Lilly Family School, we have 2 large projects that look at differences across countries in philanthropy. And certainly the sociocultural fabric of our country has enabled the growth and the strength of civil society. But going forward, I think providing incentives that encourage, as we talked about, charitable giving, and also strengthen the sector. That infrastructure becomes very important. And at the household level, I would agree that with Mr. Krim, that what we've also seen in the data is that families play a very important role in transmitting generosity. Parents tend to teach their children. In some cases, grandparents are also involved in establishing this tradition. And that goes for giving, but also for volunteering. We do see that volunteering has that twofold effect. Volunteering as a family can increase not just the children's volunteering, but also their giving when they become adults. So I think we need to look at all the different ways, time, talent, treasure, and increasingly with the advent of social media, testimony, getting Americans to share their stories about why they give and the causes that matter the most to them can also be inspiring. And in this pandemic, I think we've seen an explosion in the use of social media around charitable giving.
Dr. Asili, one last question. In the Corona crisis, we've talked a lot about automatic stabilizers for food stamps, for unemployment insurance. Have you thought about any way to automatically use stabilizers for nonprofits in times when people get in trouble and when the economy turns down?
I think one way to do that is really having strong anchor institutions at the community level. And that can include, as we have already seen, United Ways and community foundations, but also national associations and state level associations of nonprofits can provide that type of support during times of crisis. We're seeing that happen in many communities around the country with these community level funds that we discussed. Some states do have incentives for donations to community foundations specifically, but really thinking about the institutional fabric or the infrastructure that so many nonprofits lean on in times of crisis, I think is important.
Great. Thank you. I yield back. Thank you, Mr. Chairman.
Representative Schweikert. David, you still there? Okay, Representative Schweikert, if you're there, speak up or shoot me a text or give me a call. Otherwise, I think we're going to wrap up here in a moment. I really want to thank our witnesses again for being here. Dr. Asili and Mr. Krim, your testimony and your answers to our questions have really been invaluable. And I'm also grateful to Senator Langford and Senator Shaheen for their insight. Should any member of this committee wish to submit questions for the record, the hearing record will remain open for 3 business days. For participants on WebEx, you will hear the Senate recording studio announce that the public lectern live statement has ended. Until that point, members and witnesses' microphones will still cause the video to shift to them if you're left unmuted. So if any of you are still on, just be aware of that. I also want to thank the staff of the Senate Recording Studio, the Sergeant at Arms, the Rules Committee, and the architect of the Capitol and the Capitol Police, and the Joint Economic Committee staff, all of whom have made it possible for us to hold this first of its kind hybrid hearing of the Joint Economic Committee. The hearing now stands adjourned. Thank you.